Hey guys, Kill here, Forex trader, trading coach, and one of the co-founders of Tier1Trading.com, and welcome back to another episode of The Trading Edge. If you guys are brand new, this is a weekly video that I produce, giving you a look around the market, showing you the best trading opportunities that are on my radar for the week to come, and of course, dropping some very helpful hints that will help you progress as a trader no matter where you're at on your journey. Now, before we get into our video, do me a big favor, hit that like button, subscribe if you're new, and if you have any questions or comments while the video is going, please leave them below. I read each and every one and I will respond. All right, enjoy. All right, so before we hop into the charts this week, I want to give you guys a little bit of an update about how my trading's been. This is something that I've been trying to do on a week-to-week basis, not to brag or boast or anything like that, but I think it's really cool for you guys to see the journey that happens throughout a trading year, meaning like, you know, it's easy to talk about, hey, at the end of the year, this is what I finished with return on investment wise, but to see how we got there and kind of the ebbs and flows and the hot streaks and the cold streaks and the frustrating times as well. It's very good for newer traders just to see that process and really not get discouraged. And if you remember, I started the year with not a lot of trade frequency. I mean, I didn't take a lot of trades, but I was pretty accurate in trades that I took. I think I won about 9 out of my first 11 trades, which puts me at 80-something%. But more importantly, I also mentioned that, hey guys, historically, I'm about a 55% trader, right? I'm in the 40s at my worst. I think my best year I hit at 60%. So I kind of know my range of where I should be. So although I was on this hot streak, I wasn't getting cocky or overconfident. In fact, the exact opposite. I was saying, hey, the losses are going to come. And what I was doing was I was mentally preparing. And since then, I think I've been about 3 for 3, 3 wins, 3 losses. Quick math right now in my head, I think for around break even or slightly profitable. So it's been in a sort of a sideways chop. And I want to bring this lesson up because it's important. And I was working on my daily quotes, and this is one that I saw the other day. It said, if you crave money uncontrollably, you'll fear losing it. Hence, you won't be able to relax. You'll get very agitated easily by adverse market moves, and your execution will be inconsistent. At this point, you're just ruled out by your emotions. This is not a way to be in the market. And we were talking in a live room this week about a trading psychologist that I like called Denise Scholl. She's actually the person that I guess inspired the role on the show Billions. I haven't watched the role, but I haven't watched the show, excuse me, but people have said it's I guess a good trading related show. I don't know. People know I'm a trader, so whenever they get a trading show, they shout it my way. But we were talking about her, and I said one of the things I like about her is that she was actually a sports psychiatrist first, which I'm a sports nerd, so it goes hand in hand. And she finds the reason behind the reason. And it's very easy to point out what you're doing wrong, where it's like, hey, I'm trading with my emotions. But if you really want to solve the problem, you actually have to go back and find the why. Why am I trading off of my emotions? Because if you can't find that why behind the problem, you can't work on solving it. And one of the reasons that many traders lose money, or they get emotionally driven in the market, they can't make it through either drawdowns or sideways periods, is because they crave money uncontrollably, right? If you guys listen to the podcast I did, I think episode 300, I think it was called like game-changing advice for a new trader. This was the main problem that this trader had. He kept looking at the money, the setup, the money, the setup. And because of that, he was blind to everything else. And it's important to treat your trading like a business, right? We understand that all businesses have expenses, right? Your losses, your drawdowns, your losing streak, those are the expenses of the market. You're not going to win all the time, but if you're consistent with your plan, you're consistent with following your rules, you're disciplined in the market, you are trading with that edge. And if you're exploiting that edge at the end of the day, you're going to end up where you want to be at. The problem is too many traders bail on their system at the first sign of danger because the money's not coming in the same way it was the week before, and they give up and they basically start from scratch. And I'll tell you what, we're going to talk, if you guys hang on to the very end, we'll talk about this a little bit more, because I actually have a video that I was going to release, but I didn't release, but I feel like there's a part that I really liked, and I want to share it with you about kind of evaluating your trade and separating kind of the process from the outcome. I think it'll be helpful for everyone. So hang on to the very end and I'll show you guys that. All right. let's get started on the euro yen. So the euro yen is a pair that we talked about last week, and we actually didn't come down and fulfill the prophecy, right? The prediction. What I was looking for was two things. I was looking for a move down to 118s, and if you guys remember, we were looking at a 1-to-1 measured move right down here. And we were actually looking for two different reasons. For trade, we're looking for a trend continuation reason to really get involved on a short opportunity and trade it down there. And we were also looking for a counter trend reason if price action got to this level. Now, I forgot to mention this in last week's video, and I kept getting, as soon as I hit the render button, the production button, it came back into my head. But there was also a cipher down here as well. Now, it didn't hit. So there's really probably no point in me showing it to you right now, but just to see that, we had some other confluence down at that level as well. So I actually was able to take a trade on this pair during the week right here. If you can imagine, zoom down on a much lower time frame. It was a trend continuation trade on the range bar chart. And that was the video that I was going to share with you guys, but I just didn't have time to do it this week. But it ended up being a loser. So I did take a loss on this during the week. And now we're back up to retest previous structure highs. Now, or previous outside return, I should say. Now, I'll tell you this. My bearish bias still remains because we have not violated this level. So I still have a bear bias when it comes to this trade. However, if we were to violate these highs up here at 121.38, that would put us back into that consolidation and that bearish bias would disappear. What it would also give us, however, is another cipher pattern, right? So we would have something that looks like this. We would have an X to A. Oh, I just deleted my tool. Excuse me real quick. I'll just do it by hand, right? We'll have an X to A right here. So that AB equals CD would be our X to A. And there we go. Something like this. We have an X to A, an A to B, a B to C right down here. And if we rallied up to about 121.91, so right below that 122 even handle, we would have a bearish cipher pattern. So that's going to be an opportunity for you guys that trade advanced pattern formations on the daily chart to get short. Another opportunity if you're looking to get long in advance of that, again, I talked about we need to see the violation of those highs first. We could be setting up some head and shoulder action here, and whether you're looking at it as a head and shoulder or not, you can still trade it the same way. So let's simplify it and just do this, right? If we break these highs, then you can look for a move up to about 122. So this may be something that happens on the lower time frame, but you can see price action came up to our VS1 level. This is our visual level of resistance. We actually double topped at that level. I'm not interested in the double top because of how far we were traced, but I would be interested if we were able to violate that double top and then retrace and have an opportunity to trade up to 122. So that's what I'll be looking at this week as well. Not the cipher because I don't personally trade off the daily, but I will be looking for this short-term swing trading opportunity on the 4-hour and lower for chances to get long in anticipation of that cipher zone. Now, the next pair we're going to look at is going to be the dollar yen on the daily. Lots of yen weakness this week in the market. It's been a very, very active week, which made us very excited as traders because we don't really care whether the market goes up or down. We just need movement because movement creates our opportunities. And you can see this movement, right? This big rally from about 110 to 112s, right? Came right into a previous level of structure looking left. So at this point, I am looking for short opportunities, right? Unless we break that level of structure, unless we violate that level of structure, I should say, I'm looking for short opportunities. And I like getting perspective from the daily when I go through that IPDE process because it also gives me target levels on where I project price to come down to. So what I'll do is I'll mark up my chart. Obviously, I have the level of structure up here. I could look at our previous inside levels of structure and ask myself, Akil, if I'm looking to get short, where could I potentially trade this short to? So you can see that we initially had a rejection, right? The market has ran out of steam, which we would expect. Again, counter trend traders were looking for areas of relief, not full trend reversals in the market. And if we go down to the 240, there are going to be two opportunities to get involved here. One could look for a double top. So if we rally back up to this VS1 level, that'll give us a double top. You can look for that and you can look to trade it down. Another opportunity would be, again, it could end up being a head and shoulders on a lower time frame, something like this. But just to keep it simple, because we're so kind of new into it, we only have the left shoulder and really the head, so we can't really anticipate the full move yet. But a violation of this level would be a very good sign that we're likely to continue down. So if we can violate this, what is this, basically 111 flat, a little bit above that, then there's a very good opportunity. I think we'll travel back down to about 110.66s and potentially even about 110.25. So that's what to look out for on the dollar yen this week, either a retest of structure and that double top for a chance to short at previous structure highs, or a violation of this little pregnant pause area and a chance to trade it lower. So next on the list this week is going to be the Aussie dollar. And in fact, I'm going to do this real quick. I'm going to start off on the weekly because we've just broke a pretty powerful level of structure. And if you don't get the right perspective, it's going to look like we're in no man's land. And that could give you a false sense of where targets should be. So to gain some perspective, I want to jump all the way out to the weekly just to see what we have lower here. And you can see that although we are at a previous level of consolidation, a previous level of structure here, there is room for the Aussie dollar to continue lower, but it's important that you know how much room is there. That way you're not just holding on to a trade forever in hopes that these are all-time lows and it will never return, right? That can get you into a lot of trouble. But what we're seeing here on a daily, here's what's important again, right? We have the break of structure. We can actually extend this line all the way looking left. So if we violate structure, right, to the downside, then I can predict that price is likely to continue lower. If we're likely to continue lower, then where are we likely to continue lower to? That's what we just looked at on the weekly. And then if we're likely to continue lower to that level, how are we likely to get there? And there's two ways we can get there. We can go straight there, or we can pull back. And a pullback is my preferred way of evaluating a trade. So and I'm not saying sell it right now. And actually, it looks like we may be setting up for a potential reversal here. But what we're waiting for, and this is a longer term trade, we're waiting for price to return to these previous levels of structure. So maybe not quite 666. Ooh, that's a bad number. 665, I should say. But right around here, about 66.50s. Waiting for price to return to that level and then looking for an opportunity to get short in anticipation of a continued move down. And if we even take let's take our Fibonacci retracement tool from our most recent swing high to swing low. And look at that, you're gonna see we're gonna get a little bit of Fibonacci confluence with a 3D2 Fibonacci retracement right at that level as well. So allow the market to get a little bit of relief, right? We've gone down for quite a bit now. And then look for trading opportunities to continue down and retest previous structure lows. I personally, this is my trading style, I'm not a trend following trader. I would personally take a little bit of some targets off here. And then if I'm shooting for extended targets, I would look to take that lower. And I had a conversation with one of our traders over email actually the last couple of days about, he was trying to understand taking two targets and what's the reason for it. And you don't have to do it. I don't take two targets on all of my trades, but for you guys that are taking multiple targets, excuse me, the point of it is that one is conservative, one is aggressive. So I always say this, my first target is at a level where I'm very confident that the market is going to go there if I'm right in my prediction. Again, we never know if we're going to be right in our prediction, but if I'm right and the market's going to continue lower, I'm pretty confident that the market will go lower to this level. And that's where I always want to put my first target at, because I want to put some money in the bank. I want to roll my stops to break even. I want to say, hey, I want to get paid for my good prediction. Let's put it that way. The secondary targets, those are the more aggressive targets where it's like, okay, if we're going to see a continuation now, then we should extend to this level. So it's a little bit more aggressive, still conservative enough where I'm just not shooting for a random place, but a little bit more aggressive with the secondary targets. And that's the reason at least I use multiple targets. So I can get that conservative one out the way. I can put some money in the bank, have a profitable trade no matter what, and then go for a bigger target with kind of the, you don't want to call it the freebie money, but the risk-free money, because you can't lose anything on the trade. So that's Aussie dollar. Again, this is a longer term one, so nothing much is setting up right now, but this is something that you certainly want to watch for the week ahead for potential pullback and continuation opportunity. So next on the Euro Aussie, this is going to be a really quick one because it's just a simple pattern formation, but it's very similar to the Euro Yen with the exception of we never had the other breaks in structure. But we're looking at another cipher pattern here. So I'll just draw this out real quick for you, and then we'll get on to the next pair. We're looking at our swing high to swing low right here being our X to A, our initial anchor leg. This is going to be our A to B, that first retracement. Our extension down here is going to be our B to C. And then again, if we can rally up to about 164.85s, that's going to be our CD completion here. Now, very important, if you check this on the 4-hour, it is not going to be a cipher. The C leg is going to be invalid. So make sure you're able to recognize this on the daily and make sure you're not trying to be slick and maybe tighten up your stops by trading it on the 4-hour, because if you do, you're not actually trading a cipher. You're trading an invalid one. Next, we're going to pop over to Euro Canada. You can see my notes are kind of still on here from the live room, so we'll kind of actually just leave them on here. But Euro Canada, similar situation to the Aussie dollar, where we just had a break and close below a previous level of structure, and we're looking for a pullback. And same thing, we actually have that same Fibonacci confluence where you can come back up to previous structure looking left. There's going to be a 3D2 and a 50% Fibonacci retracement around that level. It's going to offer a decent opportunity for a pullback trade or a trend continuation trade, however you want to call it. So another one where looking at it at the moment doesn't really look like much, but again, the point of these videos isn't to give you signals right away. It's to give you an idea of what I'm going to be looking at for the week ahead. And of course, we'll follow up with these in the live trading room as the week progresses and see what opportunities it offers to get short. This was actually another pair that we looked at during the week where we had a smaller move right down to this 142.50 level. So this will kind of be like a secondary chance to get involved if we can get a pullback and perhaps another extension lower. Next up, we're going to take a look at the Aussie Yen. And this is a pair that is, it's kind of changed over the week. And this is a perfect example. I believe it was in the Foundation 2 course where we talked about, I think I had a section called Morphing Patterns. And it was if you guys are not familiar, the Foundation 2.0 course is a follow-up on the Foundation 1.0 course. What happened is after about a year and a half, right, I took the common questions that were being had from the first course and I created a new course to kind of fill the gaps and really maybe teach things in a different way. I guess you can say more of an advanced way, but just bridging the gap between what was taught and the questions that traders had when practically applying things. And one of those questions was about, hey, you know, I initially see one pattern and then next week I look back and the pattern is different. Like, was it ever a valid pattern or was I seeing it wrong? And the fact of the matter is that patterns morph, or price action morphs. You can easily have one thing to begin with, and then after it doesn't follow through, it can change into something else. And that's normal. Doesn't mean you're going crazy. Now, sometimes you will see crazy things in the market, but here's an example of a morphing pattern, right? So we were looking at this last week, and we were looking at this as being a wedge pattern. If you guys remember, I don't really have any, I don't care for wedges too much. There are certain types of triangles that I do enjoy, and I'll tell you about one in a little bit. But in general, wedge patterns are neutral patterns. So there's as good of a chance of it breaking to the upside as it is to the downside. So unless we have any confirmation from just price action in general, where we can form a bias, it doesn't really mean too much. So we're looking at this wedge pattern here, and we're looking for, I said, hey, you know, if we get a break to the upside, you can look for a bullish move. You get a break to the downside, you can look for a bearish move, and we draw out some zones where you can look for. And you can see that we did get a break to the upside, but then we never broke structure highs here, right? This is important for me because I'm not a trend line person. I value horizontal support and resistance. We never broke this horizontal level of resistance here. So it was never a true break for me. Not that I was trading in the wedge anyway, but just kind of the difference between, I don't like trend lines. Let's put it that way. But anyway, we broke above, closed above, and then we got engulfed right away. And you can look at this as a false breakout, and we traveled back into the range, past the midway of the range, which you can also look at as a sign of a false breakout. So essentially it was a failed breakout here. But if we readjust our analysis, right, here's what we have now. We can keep that horizontal line of resistance on, and you can see that our highs are getting, or excuse me, our lows are getting higher higher and higher. And what this changes the pattern into is what's called an ascending triangle. An ascending triangle gives us a much clearer view, or allows us to make a much clearer prediction, I guess you can say, of which direction price is looking to break out, and that would be to the upside. So this is going to be on my radar for the week ahead. Again, breaking these highs would give us a good sign that we're likely to break out to the upside. It also gives you a little bit more confirmation and more of an aggressive entry. So what I mean by that is this: when you had the wedge pattern before, you didn't really know whether to expect to break out to the upside or the downside. So out of the three ways that we can trade wedges, right, you know, the before, the during, or the after, we can only trade the during or the after. Now that you have a set prediction of which way this pattern is likely to break out, you can look to set up yourself in a trade before the breakout occurs, and that's going to offer a lot more opportunity as far as profit goes. So again, another one for the watch list today, or this week coming up, is the Aussie yen, looking for a potential bullish breakout here on this ascending triangle. All right, so our last pair that we're going to look at before I show you kind of that bonus footage talking about handling losses and separating process from outcome is going to come here on the New Zealand Canada. And you can see that we ended the week rallying down into a previous level of structure resistance looking left. And we got a pretty sexy bar here, right? We have a high momentum bearish candle, a few of them, 1, 2, 3 high momentum bearish candles in a row, followed by a rejection candle. So we're seeing a lot of bearish, or excuse me, a buying pressure down at this level. And again, that level is a previous level of structure support. Not the greatest one in the world, because you can see we have some consolidation below it, but this is a pretty distinctive level. This was a level that came right after a break of the highs. This is that first retest before rallying back up. So it is a significant level to look at. So this is a counter trend trading opportunity. You look down on the 4 hour, you're going to see we have a little bit of a retracement. Something you can look for here is a double bottom. So look for price action to make one more retest of that level. If so, that'll give you an opportunity to get long at a very good price point, very low risk, because your stops just have to be below this yellow line. And I'll give you the opportunity to trade it up. A more conservative way to look at this would be for using a 2618 as well, where you look for that double bottom, look for a break to the upside, look for a retest, and then look to get involved. And I can tell you what, if you do get something like this, right, or maybe even not this, on the daily, you may also have a higher high, higher close, which would give us that 3-bar reversal entry as well. Something that looks like, I'm going to draw it on horribly. That's not that bad. Look at that. So something that looks like this. So multiple opportunities here. Obviously, there's so many ways that you can enter a trade. We talk about that in the Foundation Course 2.0 as well. But the premise behind the trade is that, hey, we are at structure, counter trend trading opportunity. Look for an opportunity to buy and trade this bad boy up. So another one that will most likely be on our radar heading into the week, heading next week as well, unless we get a signal on Sunday. So that's it for this week, guys. I do have this bonus video I want to share with you. Again, it was a video I did of the Euro Yen trade that lost. It was a long video, actually, walking you guys through the trade, the initial analysis, and the entry and all that fun stuff. But because I ran out of days to put out videos, it just never got released. But I want to share with you the part at the end where we talked a little bit about dealing with losses, because it was, again, just, I guess on the subject of today is that, losses aren't bad. It is part of the business. So stop this association with a loss being bad, right? We all know that there are 4 types of trades, right? Good trades, bad trades, winners, and losers, right? Winners aren't always good trades. Losers aren't always bad trades. You can have a bad trade that wins. You can have a good trade that loses, right? What you want to focus on is the top 2, good trades and bad trades, with good meaning trades where you followed your rules 100%. Bad trades meaning trades where you didn't follow your rules 100%. Because in the long run, big picture, if you consistently take good trades, you will consistently exploit your edge. If you consistently exploit your edge, you will be a consistently profitable trader. If you consistently take bad trades, right, breaking your rules, yeah, you may win for a certain amount of time, but eventually you will revert to the norm and you will lose. And what is scary is many people win right away. They get this inflated confidence, and that causes them to inflate their position size, and they inflate their position size right when those losses come back, and they blow accounts very, very quickly. I am not joking. I see this on a weekly basis, unfortunately, with emails and messages crying out for help. Akil, what should I do? I'm sure you guys have heard of it as well. So check out this recording. I hope you guys like it. While you're doing so, do me a favor, hit that like button. Leave me a comment below if you have any questions about the video, or if you just want to say, hey, Akil, good job. I appreciate it. And of course, share this with your network on social media. All right? You guys have a great weekend. Go Everton. And of course, your backtested results showed that you have a positive expectancy. In the long run, bigger picture, you will be profitable. Now, what's pretty cool is I just got this on Twitter. I'm not sure if it was related to this trade or not, but someone wanted to share this with me. And he said, Akil, how do traders measure the quality of their trading process or following their process? I've read lots about focusing on process over outcome, but couldn't find anything about how to track it as well. And here's my idea. And what this trader did was create a spreadsheet. You can see the spreadsheet here. It says planned completely prior to entry. So that's kind of the before. I always judge when do a grading system. I judge the before, the during, and the after, as well as keep notes. So you have planned completely prior to entry. That's the before. Obeying sizing rules. That's obeying the correct position sizing rules in the trade, right? Risk management. My stop loss wasn't too big. I wasn't trading, I guess, too small as well. That can be a thing. Mentally rehearsed, meaning we ran through the if-then process, the scenarios in his head, entry, stops, and targets, if this, then that. Journaled the same day. I know journaling sounds weird to some of you guys, but journaling is very important. It's very important to track how you feel during a trade. Are you feeling anxious? Are you feeling nervous? Maybe it's a day where you're just feeling sick. On sick days, your vision may be clouded. Maybe you had a bad breakup or something like that, and you want revenge in that aspect of your life, and instead of taking it out on your significant other, your previous significant other, I guess, you take it out on the market. And I know it sounds stupid, but that's important. This is one of the reasons I do videos like this on YouTube. This is one of the reasons I do Trading Coach podcasts. It's a way for me to journal, just not in your traditional way. And in fact, I didn't plan on getting into trading education. I got into trading education because when I was a newer trader, I was journaling, and I just did it on an open blog, which I don't even know if it was, I didn't realize people were reading it, but people started reading it. And as I was writing about how bad I was each day and all the mistakes I made, people started latching on like, yeah, I do that too. Yeah, I suck today too. And that's kind of, I guess, my claim to fame, I guess you can call it, but that's important. And then follow the plan exactly. And then he has bonus executed even when nervous. That's good. And then had a total process score. I do so in a grading way, like AB equals CD, where 4 points will equal this, 5 points will equal that. But this is perfect because it gives you a way to kind of have, it's early in the morning, I can't think of my words, not security, not clarity, closure, I guess, in your trade. And what I mean by that is when you look at a trade like this, wherever it went, when you look at a trade like this, the first thing you're asking yourself, especially as a newer, underexperienced trader that hasn't gone through the process of understanding that I'm going to lose a lot, you look at this and you automatically think, what is wrong? And you automatically think, what is wrong with me? And you start losing confidence. I did something the right way or the wrong way. I stink as a trader. I'll never be good. And that will eat at you. This trade is over. It's said and done. But that will eat at you for the next trade. And those little, confidence eaters will affect you as far as maybe you missing a trading opportunity because you're scared, or you taking targets early, or moving stops back because you're scared. So you need to have closure. So when you do a scoring system like that, it's important because now you can say, okay, I did everything the right way. It's okay. There's no one to blame. The market just did what it wants when it wanted to, as it always does. I can move on to the next trade and have full confidence. And that's going to help that belief action result cycle of believing in yourself. And the more belief you have in yourself, the more likely you are to take the right actions. The more likely you are to take the right actions, the more likely you are to see the correct results. And then as you see the correct results, you get more belief, and the cycle strengthens and strengthens. Again, easier when you have a lot of experience like myself, because I've been doing this for 13 years. Harder when you're a newer trader and you don't really have that true belief aside from what you've seen in your back testing. So I thought this is an excellent example, one, to show a losing trade. I lose all the time. I'm a 55% trader. I'm hot this year so far at about, well, I was at 77 before this trade. Will probably take me down in the 60s since I only have about, 13 trades this year. But I lose all the time, guys. And it's important to see. I know we see a lot on the internet about how we handle winners. I think it's even more important to see how we handle losers as well. And hopefully this was helpful for you.